How do you get reimbursed? You complete a claim form that's available at 24HourFlex.com, and this form is also included in your enrollment kit. Attach receipts and fax that form to the number that is on the claim form. Assuming the claim form is in good order, meaning that there are receipts attached and it's signed, etc., we will process that claim within 24 hours, weekends and holidays excluded. And then you will receive a reimbursement, usually within 2 to 3 days. Bear in mind that you aren't receiving a reimbursement within 24 hours. We are processing it, and you're getting reimbursed within 2 to 3 days. And this reimbursement will take the form of a check or a direct deposit, if you have signed up for direct deposit. If we're looking for a receipt, the receipt must include a date of service. It must outline what service was performed, the vendor providing the service, and the cost of the service. So that's what we're looking for with an acceptable receipt. Canceled checks are not eligible receipts, and credit card receipts do not constitute an eligible receipt because the credit card does not have all the above items on it. Explanations of benefits, or EOBs, from your insurance carrier are eligible receipts, and bills that you receive from your healthcare provider are okay as well. In other words, you don't have to pay the expense first. You can get a bill, say, from your dentist and submit that on your claim and get reimbursed. Then you'll take that money that we reimburse you and give that to your dental provider. Many flex plans offer debit cards. So here's a summary of the debit card rules. We also have another presentation that goes into these rules in more detail. The key benefit of the debit card is that it provides immediate access to your flex funds. Receipts are required unless the charge equals a copay. Each health insurance provider, along with the employer, will establish various copay amounts. For example, perhaps the charge for prescription drugs is $20, or for generic prescription drugs might be $10, or if you go to the doctor, it might be $20. We code into our computer system your company's copay amounts, and if the charge equals a copay, then we will not ask for a receipt. Second, if the charge equals a previously approved expense, then we will not ask for a receipt. Or if the merchant that you're swiping your card at has installed an IIAS system, which is a special IRS-approved inventory system, we will not ask for a receipt. There are thousands of merchants that have installed the IIAS, and consequently, right now, over 82% of the debit card swipes at 24HourFlex.com auto-substantiate, meaning no receipts are required. And that's because there are simply thousands of merchants. For example, Walmart and Walgreens and Safeway, King Soopers, and almost every major supermarket, almost every pharmacy in the United States has installed the IIAS system. And when you're working with that sort of pharmacy or merchant, no receipts are required. We have an updated list at 24HourFlex.com where you can look and see if your favorite vendor has installed IIAS. It's always important to keep your receipts. Keep them, because if we do ask for a receipt, at least you'll have that. Now, when you're submitting expenses, there are some rules regarding dates of service that you need to know. And here I'm going to use an example that includes a calendar year plan. This plan, of course, then runs from January 1st to December 31st. Expenses must be for services rendered to you during the plan year and while you are a plan participant. So if you join the plan mid-year, expenses that are incurred by you prior to the date you join the plan are not eligible. Likewise, expenses that are incurred in a prior year are not eligible in the current year. The key point that we're looking at is the date of service. It does not matter when you receive the bill or when you pay the bill. We're looking at the date of service. Some plans have taken advantage of the IRS grace period, which is an additional 75 days, 2.5 months after the end of the plan year, during which you can incur additional expenses. So here, the date of service can be any date up to March 15th for a calendar year plan. That provides a 14.5-month window during which time you can incur medical expenses or child care expenses. Plans also have a run-out period. Typically, it's a 90-day run-out period after the end of the plan year. And this is a period during which time you can submit claims for reimbursement for eligible expenses. So make sure that you take advantage of the run-out period. That run-out period varies from client to client. In this example, it would end at March 31st. You also have online access to your Flex account. You can go to 24HourFlex.com, click on My Cafeteria Account, follow the instructions. Make sure to turn off your pop-up blocker, log in, set up your username and password. The information online is extensive. You can view your account balance, transaction summary, you can create an online claim form, you can order additional debit cards, or you can view pending payments or receipts. For example, if you swiped your card and you don't know if we're going to ask for a receipt, you can go immediately online and determine whether or not a receipt will be required. The final rule here is the use it or lose it rule. Funds left in your account or your accounts are forfeited after the run-out period has expired. Where does it go? It doesn't go to me, it's returned to your employer. So you must plan wisely. Don't overestimate your expenses, likewise don't underestimate your expenses. I recommend maybe estimate your annual expenses, maybe take 80 to 85% of that amount. But you can determine these more accurately. What happens if I terminate employment in the year? Well, you can be reimbursed for eligible medical expenses incurred prior to your date of termination. And you can spend down daycare flexible spending account amounts with eligible expenses even after your date of termination. Now, you will have the normal plan run-out period to submit eligible expenses for reimbursement to 24HourFlex.com. If your employer is subject to COBRA, you will have a COBRA election on the medical flexible spending account, in which case you'll receive notification from your employer. If you make a COBRA election on your medical FSA, then you can continue to incur medical expenses even after your date of termination. However, you will have to continue to fund the medical flexible spending account with personal funds. In summary, cafeteria plans provide tremendous tax benefits, but it's important that you know the rules in your company's run-out period. Read your 24-Hour Flex enrollment kit and your company's SPD. Thank you very much. This is Nathan Carlson coming to you from the 24-Hour Flex studio.